Hey everybody, this is Nate Smoyer, and you're listening to the Tech Nest Podcast. This is the show where we sit down with the leaders in real estate and technology to find out what they're doing to transform the way we buy, sell, and invest in real estate. If you've got an interest in real estate and technology, stick around. You're in the right place.
Well, hey everybody, we got a great episode here for you today. I'm talking with the co-founder of MetaProp, Zach Ahrens, and we cover everything in this episode. And when I mean everything, we talk about biggest opportunities that exist in proptech as well as outside of proptech. We go off topic quite a few times. But I think this is really important, especially for those, first off, if you're a real estate tech company and you're like, man, I would love for MetaProp to invest in us. You're going to want to listen to this because you're getting the insights of, what they look for, what they're interested in, but also you're getting behind the curtain, if you will, or behind the mind of a VC. And this isn't just any firm that, Zach's a part of here. MetaProp is the most active early stage investor in all of PropTech. And I went and looked back to their Crunchbase, and it said that they've done no less than one deal per quarter since 2015. That's extremely active. And when you think about PropTech itself, they were early in on this. So a ton of wisdom coming in here. Had a great time recording this episode. I think you're going to love listening to it. Check it out. Well, hey, Zach, welcome to the show.
Oh, thank you for having me. So great to be on, and Happy New Year.
I keep forgetting it is 2020. We are in the 20s, the roaring 20s. Is that what they're going to call it now? Do you know?
Well, the beginning of the last roaring 20s, 1920, was there was a bomb that was detonated on Wall Street. And the stock market still went up that same day.
Well,
and that was the start of the roaring 20s.
I didn't know that history lesson. I do appreciate that. I went to public school. So
if you go to the intersection, so it's the old Morgan Guaranty Trust building. It was where JP Morgan worked. And if you go, it's across from the Stock Exchange and Federal Hall. They still have a couple of holes in the wall of it.
Wow.
Which were from the shrapnel. Yeah. And the people they suspected of doing, they thought it was tied to, do you remember Sacco and Vanzetti?
I don't know who they are.
Anyway, they were two, Sacco and Vanzetti were two people that were blamed. It was kind of like a Julius and Ethel Rosenberg thing, if I remember correctly.
This is by far...
That was the start of the roaring 20s, the last roaring 20s. Yeah, I think
by far the best intro to any episode we've ever had. No one's ever hit it with a history lesson right off the bat.
I think we're going to call it the roaring 20s though.
There it is.
A circuitous answer, but yeah.
Well, before we go too far into history, I haven't introduced who you are and what you do. So can I give you the pleasure of introducing yourself? Who are you and what do you do?
Hi, I'm Zach Ahrens. What I do is I work at MetaProp. I'm a co-founder and partner there. We're an early stage proptech focused venture capital fund based in New York City.
All right. And so normally when we have people on the show, it's, they're like a company founder and it's easy to say, okay, what's the big problem you're trying to solve? And I thought about that. I was like, well, I think this will fit anyway too. So, because you're obviously working to solve some problems. So really, what are the big problems that MetaProp sees that they're solving?
Well, the fundamental reason we exist is because we're looking to tether together real estate and technology, which up until pretty recently, those two sectors weren't really tethered together. And we tether them together through a venture capital business model. Mm-hmm. But you can tether them together through a lot of different business models as well. Like Avail is tethering them together through building a product that landlords actually use. An aggregator, news aggregator like CRE Tech is doing it and monetizing in a different way, right? They're curating content, they're doing events and shows, right? There's a lot of different ways to sort of peel the banana. In our particular case, like the fundamental reason we exist is to tether those worlds together, and that's the same as it was when we started the company in 2015. And but what kind of problems are we trying to solve? We're trying to solve all the big problems in the real estate world. So we're trying to figure out how to ensure the long-term survivability of the built world. And how do you make the built world more affordable? How do you make it more accessible? And we think that technology is fundamentally, and innovation is fundamentally what underpins that entire transformation. And so, like, we have our sort of short-term why we exist, which is like to tether those worlds together. And then the long-term mission is like long-term survivability, resiliency, sustainability, affordability of space.
Very cool. There's sounds like a whole bunch of easy problems in there to try and attempt to solve it at the same time.
Well, look, I mean, we try. We're not like we're saying, like it's a collaboration, right? It's a public-private partnership. It's a partnership with real estate companies, a partnership with software companies, a partnership with municipalities. I mean, we're not like we're doing this like ourselves.
Right.
Like, if we can chip away at like one small, if we can be like Andy Dufresne and like over the next 50 years, just like chip away at one small section of that wall, like we'll be happy. Like we'll break through a little bit of it.
How do you get into this? Because I mean, I imagine it's not like one day you're like, you know what we need to do? We need to connect that computer to that building over there and make something magical happen. Like, how do you find yourself at MetaProp?
It was a circuitous journey for sure. Yeah, I mean, I got into growing up, my dad's always been in the real estate business for as long as I've been alive. Originally in the private sector. So I grew up and then ultimately public sector. And so I grew up sort of with it a little bit. And then I kind of got interested in the internet in the year 2000, which is kind of funny. 20 years ago.
Makes a lot of sense. That's when I built my first
Y2K. Right. And I had an internship in London. I was 18 and I had an internship in London. And the firm I was working for was called 4leaf.com. And you can't find anything about them online because they went under. But they were an original like LinkedIn. Like it was a business networking site. So I interned for that site. I think I must have. Well, I was still in high school anyway. I'm turning 37, so it was 99 maybe.
Okay.
And so that was my first taste of like working for an internet company, and I loved doing that. I had a great time that summer, and so I was like, maybe I want to work for an internet company or start my own internet company. So that was my first taste of that. And then when I graduated from college, I worked in investment banking. And I liked certain aspects of it, but didn't like other aspects of it. And got an offer to join a team that was doing this travel tech website, like walking tours and technology, blending them together. So I did that for a while. Ultimately sort of turned it into an online, mainly an offline walking tour business was how we paid the bills. And then we tried to build technology and could never kind of build the technology that I had in my head. And that was before I sort of read the Lean Startup and started thinking about things with a more startup-y type of mentality and methodology. So I did that for a while. I became a tour guide, led tours all over New York City. And I was doing like social media marketing, content marketing, kind of early on. And my dad was like, you should come do it for Millennium, which was the real estate development company that he started in 1991. And they needed help doing social media for a particular project out in LA. They wanted to galvanize support from sort of, they essentially, they thought that there was support out there for what they were trying to do in terms of increasing density around mass transit in LA.
Mm-hmm.
But if they did the traditional community outreach route as well. But in order to reach sort of millennials, they needed to be online.
Mm-hmm.
So we were pretty early back in 2010 doing social media.
Were you calling them millennials back then?
I don't know if they were still known as Gen Yers back then, but like whatever, it was like our generation. Like
I love
whatever
getting
we
called all
them.
those names. It's my favorite.
My favorite one of those is the Jordan Catalano generation, which I am in. It's a little micro generation between Gen X and Millennial. Like you don't really identify as either.
Yeah.
Kind of identify as both. Anyway, so was doing that. And then I went to business school, started getting excited about venture. So I interned for a venture capital fund called ENIAC Ventures. And they kind of taught me how to do venture. And then I took a couple classes at business school at Columbia. And one of the classes I took was with Ed Zimmerman and Dave Haber, and they were both lawyers, still are. Excellent sort of startup lawyers, and they kind of taught me how to negotiate a term sheet and how to sort of structure venture deals and things like that. And then I took another VC class with Stu Ellman and Will Porteous, who were the two of the partners at RE Ventures, and Stu was the one who gave me the idea to focus on what we now call proptech. So he was like, you're doing this like VC stuff, you're investing, and all of my sort of investing theses were around my previous business, which was related to walking tours. So I was investing in like kind of stuff that was built on the Foursquare API back then. So companies like Local Mind and Fondue and all these sort of new ratings apps that were popping up.
Yep.
And Stu was like, you should really just focus on real estate technology because it's going to be really big. And that was like in 2012. And so
That's
I just
advice.
aggressively, yeah.
I'd say that worked out.
Yeah. Well, you know, he's a very prescient guy. So I'm just actually doing a deal with him right now, which is pretty cool. After that, it was sort of off to the races. Just started focusing on these types of businesses, your type of business. And then got the opportunity when I met Aaron Block in 2015 to sort of kick up a notch what I've been doing sort of as a side hustle when I was primarily working in real estate development and property management. And like create a platform essentially to do it, be more impactful.
Yeah.
So that was the sort of circuitous journey to starting MetaProp.
Yeah. I mean, it's a little bit of roundabout, but obviously you'd been around real estate for your whole life. So you've seen like how it's been done.
Yeah. I mean, I went on the job site when I was 8 years old. I went up in the hoist, wore a hard hat, on one of my dad's projects. So yeah, it was, it's always been around.
So then, but see, that's where I think like you have a distinct advantage over a lot of people because you're not trying to like imagine what is going on in the real estate world and then applying technology to it. You're seeing, okay, I know what's happening. I've seen what's happening and how things work. And here are all these points of friction that for whatever reason, just say, well, that's the way it's been done and that's how we do things. But you're coming from the tech, perspective of like, well, there actually is better ways that we can address these problems, or there are ways that we can solve some of those problems and
Yeah.
make life a little bit easier or more enjoyable.
Yeah. Also, I think what benefits is that at Millennium, we didn't really have departments necessarily. Everybody did a little bit of everything, like more or less, like in my role. So you did a little bit of property management, a little bit of social media, a little bit of acquisitions, a little bit of dispositions, a little bit of leasing. So I didn't get good at anything, but I can spot problems in everything.
Yeah. Yeah.
And that's super helpful. Whereas like if I had just like been at another firm and like focused on, maybe I would have been the best or really good at leasing.
Yeah, you would have been a leasing specialist.
Yeah.
Yeah.
Not that there's anything wrong with that.
No,
and like,
no.
But I wouldn't be able to evaluate like as many companies easily and be like, I actually had that problem. Like I've actually had like 200 or 300 real estate problems in my career.
Right.
So like there's a lot of companies like just sitting in my head.
That's a good thing that you've had 200 or 300 problems because, I mean, you survived them.
Yeah, man.
So
I got
300. I mean, that's enough years. I'm trying to think if I could. I've never sat down and wondered, like even my short term as a real estate agent, like how many problems did I encounter? I might have had one deal with about 100 problems itself, but that's what happens when you're a rookie agent and you don't pick good clients. I want to ask you about this. So, okay, so you this whole story leads up to we're going to do this thing called MetaProp. First off, what's behind the name MetaProp?
I don't know. What do you think about it?
I think it's cool. I don't know. It's like MetaProp. Yeah. Okay. It sounds like they're doing big things in property.
Yeah. I think it's just like we, it's a catchy, it kind of, is it ironic? Is it not? What do you mean by like being, meta about property? Like that's so ridiculous.
Right.
So it's just a name we picked that we like dug it and, it looked cool, like
I think
the
it
way
works.
it's sort of spelled out. And it's like an easy brand to like digest and remember. So yeah, we dig it, but we didn't have like a 48-hour like whiteboard session about it. Like Aaron just like came up with it. We're like, that's pretty fucking good.
I think that the name sometimes is just what you make it. It is what you make it.
Yeah, for sure.
So since you guys got up and running, my understanding is you guys are the most active early stage investor in proptech. And according to Crunchbase, you guys have done 80 deals since 2015, and at least one deal, So 80 deals and at least one deal per quarter since the third quarter of 2015. And I know Crunchbase isn't always 100% right, but I'm sure that's pretty close, if not 100% right. But my first question is...
It's close. We've probably done 72 since
72. Okay. Is that flow, is that consistent flow of deals normal? Like is that to be expected?
Like in the future of the firm or like...
Yeah. So, I mean, you're doing one deal a quarter. And I realize like you're not necessarily just meeting.
No, we do more than that. We do way more than that.
Right. So sorry, at least one deal a quarter since 2015, right? Tail end of 2015.
Right. That's true. Yeah. But now we do them faster.
Yeah. So I'm just curious, like that seems like a high deal flow.
Yeah. We see 40 deals a week.
Okay.
And
so
that's like deals we actually look at. And then there's like, garbage beyond that. But
so how many companies are you talking to per company you do a deal with?
What do you mean?
Like, is it 100 companies you get an introduction to for every one you end up doing a deal with, or?
Oh, well, we see 40 deals a week,
right?
And so that's that is 160 a month, right? And we do 1.5 per month.
Well, I'm not good at math, but that's a pretty good. That's a high number of deals you're looking at. I mean, you're looking at more than Shark Tank at that rate.
Yeah, I mean, maybe, probably not.
The TV show?
Yeah, how many deals do they qualify before they actually get on the show?
Oh yeah, well that's fair. I think they only do like 3 or 4 per episode. But so then walk me through, like, how do you maintain that deal funnel? Are you chasing down these companies, or are they knocking on your doors at this point?
Both.
Okay.
We are constantly chasing down companies, and companies are knocking on our door simultaneously.
Right.
And you want to keep a healthy flow of both of those things happening at your firm.
Right.
At any given time.
So if I'm a real estate tech startup founder, I've got this really cool solution. It's going to make everyone billionaires. We're going to be a unicorn in 2 years. How do I get your attention?
Have one of your customers email me about you.
Oh, interesting. Does that organically happen, or do you find founders actually have their customers send you an email?
They never do that. But I'd like that, because I want the customers to become involved in our activities as well. So It's like, it's a win-win for me to talk to more people who own real estate.
Oh, that's fascinating. Okay. That was not an approach I would have expected. I would have expected something like have a really cool...
Well, that's my new approach for 2020. That's my resolution for founders.
Let's hear it.
No, to have your customers email me.
That's your resolution for other companies. Your resolution is for other companies to have their customers email you.
Yeah.
Okay. All right. I can dig it. Hey, that's fine. That's fair. That's your resolution, not mine. I don't see a reason why not. I think that'll be probably pretty interesting. So if anyone's, for the people who are listening to it, if anyone's listening to it, we have a few listeners. For those who are listening, I want to take them up on the challenge here. Zach wants you to have your customers email him. Well, I'm not going to give out your email. You can give it out if you want to, but we can also give it out at the end of the show if you want to do that.
Well, yeah. I mean, my email's pretty discoverable.
There you go. Okay. So be resourceful, find his email, have your customers send him an email. That's so good. So the other thing that you guys do at MetaProp, I think a lot of people are familiar with this. You also have an accelerator, right?
Mm-hmm. Yeah.
Okay. So, but not all portfolio companies necessarily go through the accelerator program, right?
No, the accelerator's very small every year. It's about 5 or 6 companies per year. And as I mentioned, we're, as you actually mentioned first, we're funding way more companies than that.
Yep.
So we started the firm as an accelerator, and it was we still believe that a lot of proptech requires a programmatic approach to sales and distribution and setting metrics for yourself and goals. And for some people, an accelerator is a really good sort of way to get themselves and their business centered. Mm-hmm. And so we still offer that program. And, we still get hundreds and hundreds of applicants every year. And, we take 5 or 6 companies. And so, yeah, we've done it since 2015.
Wow.
It's an every 2-week program though. It's not a live in our office kind of program. We don't have the room, and a lot of the companies don't actually want to be disrupted to relocate their operations.
I mean, I visited the office. There's a couch.
Look, if you're a portfolio company, you can come chill, but
true startup vibes.
Yeah.
You guys get to sleep on the couch and work in the conference room. And no. So what are some of the criteria though that you look for companies that are applying for that? Like, what do they really need to demonstrate other than having their customers email you?
Well, I mean, they need a reason for wanting to do it, because it's an intense program in many ways, and it's not for everybody. So they need to have a clear sort of goal that they want to hit.
Yep.
That's fundamentally business related before they think about joining. And then we have to have the confidence that we can actually help them achieve it in a turbocharged way. And if we can't, it's typically not a good fit.
Yeah.
But it's been great for us. It's been great for the brand. It's been great for the returns. Some of our best performing companies come historically from the Accelerator.
Mm-hmm.
So, we think that trend will continue.
Do some of those companies then go on to become a portfolio company? Is that the idea of that?
Yeah, I mean, they're all portfolio companies. Some of them go on to us, putting millions of dollars into and sitting on the board and really, making it a core kind of holding of the theoretically like return driver.
Yeah, makes sense. This might sound like an odd question, but I mean, obviously you're talking to all these different companies, so you're seeing a lot that's out there. But I've seen VCs on Twitter talk about having a book of ideas that they wish companies would go out and solve so they could go fund it. Do you have one of those books or a list of ideas you just wish people would solve?
Of course.
Are you willing to share any of those?
Yeah, of course. I mean, I'd love to share some of them. I think there's going to be somebody who solves the grocery delivery in urban area explosion through technology and uses real estate creatively to do that. And I haven't quite seen anything that at least was available to finance. So that's an idea we've been sort of kicking around. You're going to need, like, zoning and building codes are going to have to become standardized over the next decade, like by municipality, in order to absorb like mass modular and prefabricated housing. Because the way to manufacture at scale cheaply is to really, really strangle your supply chain. And you have to make sure that all of those SKUs are compliant with every single building code and every single zoning code for the design of the particular municipality where you want to build. And so that's going to all need to change. And the company that's like building that is going to win and make a lot of money. So that's another thing we're looking at for 2020.
So do you think this is going to be a thing where someone's able to convert all local building codes so that they read as one, or that there's going to be a federal overhaul of building codes?
Neither. I think there's going to be a technology company that's going to create some sort of GraphSQL database and APIs that push and pull that standardize everything for architects and developers and sort of enable push in, pull out in a way that we can't even really fathom today.
Have you
fundamentally
seen what City Builder is doing?
Yeah, City Builder is very cool. Yeah, it basically be similar to that.
Yeah, and I know they're only working in a few cities, but
yeah, it's very cool stuff. Yeah, we have a firm called Envelope that we backed that is doing very interesting things with the zoning code. But they're looking to what the difference is there with those companies is they're looking to sort of optimize it to make it more profitable. I'm looking to optimize and standardize it so modular fabricators can plug into it.
Interesting. Okay. Yeah. So take what we do with hardware today, but apply it to buildings.
Yeah. I mean, I'm not familiar enough with the hardware supply chain, so,
fair enough
to know, but I would imagine, yeah.
Don't you think that Amazon and Whole Foods could just easily solve that grocery problem though, without anyone else having to build into it?
Probably. But they're not.
But they haven't.
They're not doing it.
Yeah.
So.
Yeah, I can say that a good friend of mine, he runs a little interesting newsletter called Curious. He wrote about what's that store? It's one of like the big chains, not Safeway, but they do the grocery pickup at least. So it's not in the major metropolitan areas, but in the surrounding areas. It was fascinating. He stopped one of the the grocery guys in the store who was doing the shopping. Just started asking him all the questions to get the numbers on what's it cost and how they do the grocery shopping and all those things. And it was fascinating just to hear the tech that a grocery store has in making the shopper, the person designated to do the grocery shopping for you, so you can just pick your groceries up and go. They optimize the route through the whole store. But there's no reason why they can't just have a little robot go do that. And then it drops it off into a truck. And then that delivery truck has the route all perfectly planned and it can drop off the groceries. That just seems very reasonable to me, that it could just be a simple warehouse and robots do all the shopping and drops it into trucks and ships it out. Just a matter of, I suppose, warehouse space at that point.
No, I think it's the issue of the idling trucks. How do you have facilities that are micro enough in buildings that are not necessarily warehouses?
Interesting.
Because you can't do these insane package rooms either in the rental buildings. Those don't I don't know.
Yeah. Well, that's probably a little bit bigger of a problem that I'm ready to tackle. So I won't be the guy to solve that one for you. But if I meet him or her, I'll let you know. I'll send him along.
If they know anybody.
Outside of that one, what do you think are some other of the biggest opportunities right now that startups are either catching wind of or they're just not taking advantage of?
Outside of proptech?
Generally? We could. I was only interested in proptech, but if you think something else is cooler.
Yeah, I think a lot of other things are cooler, but I'm not really qualified to talk about other things. I'm qualified to talk about this subject.
I'll give you one. You want to take one? Just take one. Let's go for one that's a little bit off topic.
You want to give me one, or you want me to give you another?
Yeah, you take one off topic. What's a cool opportunity out there?
No, off proptech.
Yeah.
There's a lot of people who want to do meditation, and that's already sort of a saturated market. But there's also a lot of people who are looking for alternative Judaism. And there's a way to do that. Also, this is kind of morbid, but death tech is going to become super big in 2020.
Is there ever an end of supply?
No, it's a counter-cyclical business. And there's not a lot of technology tying the entire thing together. So you have palliative care, you have people doing the estate planning for the survivors, you have accountants, you have lawyers, you have funeral arrangements you have to make. You have 7 things that different people need. You have the religious aspect of it. And there's sort of no technology to tie it all together. There's a couple platforms actually just came out in New York that are doing interesting things. But there's a huge opportunity right now in death tech.
I never would have thought about that. But you could make the argument that that's a real estate play for a lot of people. What are the motivating factors for people to sell properties?
I've wanted to do a cemetery deal for a while, but we haven't found anything that was quite right.
Got it.
There's a company called Plotbox that I passed on that I shouldn't have. That was a very cool company.
It's called what?
Plotbox. It's SaaS for funeral homes, cemeteries.
Oh, all right. Well, I'm just trying to figure out what the subscription as a service is there.
You got to run the facility. It's the same way.
Oh, I see.
Run a medical office,
Oh, I see.
We're looking at we haven't done a deal in medical office yet. We're really want to do a deal in medical office this year. life sciences, that kind of stuff as it relates to the real estate. What else? There's going to be an explosion in sort of digital real estate as it relates to people structuring deals. There was just a new fund announced, partnership between Sidewalk Labs and Ontario Teachers Plan to do digital infrastructure investing. You had Colony Capital, which is one of the biggest REITs, sort of pivoting the bulk of their business to Digital Bridge, which is this digital infrastructure REIT effectively that they bought. So there's this fund, growth fund, Digital Alpha, that's spun out of Cisco, that's doing interesting things. There's going to be a lot of interesting things happening this decade at the intersection of digital infrastructure and software.
Interesting. Yeah. Okay. And give me one that's related to proptech now.
Well, that one's tangentially related to proptech.
Okay, that's fair.
The digital infrastructure.
Yeah. Okay.
I mean, anything we like to track general trends in real estate, right? So like, what have real estate people been buying? Because, cap rates are so compressed, they've been buying industrial and logistics and warehousing. Although
trailer parks.
Some would argue, right? Trailer parks, RV parks, right? So looking to do something in that space potentially.
Storage is
medical office, storage. Not so much recently. So, we're tracking those trends. Those trends continue in the real estate market. If you want to know trends in the real estate market, just call, Bob White, who runs Real Capital Analytics, is just like, I saw him present down at the stock exchange for the Wisconsin real estate event. And he's just a font of knowledge of, global flows and what people are buying. So yeah, I mean, we want to follow where the hard asset real estate people are going.
Yeah, I kind of do want to know what Bob White knows. I don't think I found the right guy on LinkedIn. He's not Sherwin-Williams, is he?
No, he runs Real Capital Analytics.
Found the VP of real estate executive at Sherwin-Williams is also at Bob White. Unrelated, but I like that. I think that there's a lot of interesting opportunities. I'm excited because I think this next decade is really going to be the make or break of a lot of ideas, but also the formulation of new ideas and people being bold enough to tackle them, because I think we're further along than in some areas than others would have guessed. I think that the speed of the transaction, I think it's accelerated faster than some would assumed it would, and I don't see it slowing down personally. But I think those are all really interesting ideas. I want to kind of shift a little bit in. Speaking of all those deals or those ideas, obviously they're going to take a lot of money. So, last year, it's 2019 seemed like it was really a hit year, if you will, for proptech. Like, you can take all the money WeWork gets out of the equation, and still it's quite a bit of money put into proptech, real estate tech, even some of the fintech stuff that seems like it's, could be both or fall in both worlds. Do you see that trend continuing?
Yeah, I see it continuing. I see it accelerating until, there's the next global slowdown. And, we'll see. I mean, we've never had a situation where we have record low unemployment, but rates are still so low and they're maybe not going up. And so what does that do for the real estate market? What does it do for the venture business? I don't know. We're sort of in uncharted fiscal and monetary policy world. So I don't really know, but I think within an expansionary world, proptech continues to be funding in it, at least continues to increase. I think in a world that's contracting, you still have revenue increase because you have a lot of people sort of doubling down on it instead of shying away from it. But I don't know if investment, continues to increase. unabated. I mean, we've had an exponential growth in the sector. You know, from 2013, it's 500 million of venture capital to, you know, excluding the money that went into WeWork this year. I think we're going to have 12 billion, 13 billion into this sector once, you know, the books are closed on 2019. So, I see that continuing.
Yeah. Do you think that there's going to be more investors or venture funds jumping at, hey, I want a piece of this action. I don't have anything in real estate. I want a piece of this. Or do you think it's really going to stay, you know, the people who, I guess the last few years who have been involved with the industry and know it best, are they going to be the ones that dominate it?
I think both. I think you're going to see more deal volume amongst the established investors and more deal volume amongst newbies.
Okay, the pie gets bigger. Everybody gets a slice here.
I mean, look, every deal now is way more competitive than it used to be. So we'll see. There's definitely a lot of capital chasing deals. So I don't know. I think we just have to execute.
Yeah.
And just like, you know, do our job and like be nice to people and try to do right by people and like see if we can win deals.
You make it really sound pretty simple. just execute, be nice to people, and that'll work.
I don't know. I mean, I don't know. You know, like there's so much competition. To your point, like you know, like any day you're competing against someone who, to your point, doesn't yet have something in the sector and is willing to pay whatever they can to get a logo in it. I don't blame them. It's a great sector to be in.
Yeah.
And then you have the people who are, you know, who've seen, you know, 3 of them. And so, you know, sometimes you wonder if you're, you know, or am I, sometimes I look at deals and like, am I jaded? You know, because I've just seen so many of these types of deals. So it cuts both ways.
Fair enough. I want to shift into the bottom segments of the show, but before we do, I can't go on without asking this because the people want to know. The people have been wondering, where is the MetaProp cast? And if it's coming back.
I can't guarantee that it's going to come back, but I will propose it at the next meeting I have. See if people want to do it. I would do it. I would host it. Do you think I'd be a good podcast host?
You don't have to know anything to be a podcast host. That's the best thing. You can just ask questions. So I think if you're nice to people, that's all. Here's my response to being a good podcast host. Be nice to people, ask questions that the guest cares about, and let them talk. I feel like...
How many podcasts have you done?
This is going to be episode 71.
Wow, that's a lot. And what kind of people do you typically interview?
They're founders, executives, CEOs, investors, or other people in real estate who are using tech in an interesting way.
Very cool.
Yeah. That's the whole point of the show. To feature the leaders and innovators in real estate and technology.
Well, I'm honored to be considered one of them.
Yeah, I mean, I told you at the top, before we got on the mic here, I mean, the MetaProp podcast was one of the podcasts I binged before even starting mine. Like, it was part of the inspiration as I was making my own way into prop tech. So, you know, maybe the people is just me asking where it's at and when it's coming back, but I think the people want to know. I think the people want it. So, well, hopefully you guys will bring it back. I look forward to it.
I think we should. So why don't I have that as a goal for 2020?
There it is. Second New Year's resolution.
Yeah. Yeah, exactly. My other one was for other people. So
I'm going to come up with my own New Year's resolution that's really for other people. Mine might be like, I wish that every auto. Here's my New Year's resolution. My New Year's resolution is for every auto DM on LinkedIn is actually a gift card to Starbucks. That's my New Year's resolution. Everyone who sends me a DM automated on LinkedIn should also send me $5 to Starbucks. I got one. Wait, hold on. This is really off topic, but I'm going to get back to it. I got one yesterday or this morning, and I accepted it. The guy's going to send me a pinatagram. He asked if he could send me a pinatagram, and I gave him the Avail office mailing address.
That's amazing.
We'll find out what that is. All right, so we're going to jump into a game I call For the Future. This is the segment where I get to ask each guest who comes on the show to give their best predictions based on the following 4 questions. Zach, are you ready to play?
Well, I'm an expert at the 4 questions from the Sailors, so bring it on.
Okay. Question number 1, what does MetaProp look like 1 year from now?
We hopefully look like a more diverse, better run, more thoughtful investment firm with more AUM.
All right. Question number 2, and I'm officially on the fly changing question number 2. I used to ask everybody, what's the housing market look like? And, I got the same answer every time. So I'm going to start changing that. Question number 2. How will you describe what proptech will look like 1 year from now?
We're going to see a lot more consolidation in proptech in 2020 than we did in 2019.
All right.
Not just big companies buying little companies, but little companies finally merging together, which we really haven't seen yet.
Why do you think that's going to be the case?
There's a bunch of companies now that are good companies, but they have upside down cap tables and they're not really venture fundable anymore. They're private equity fundable, but they're not quite big enough for private equity firm unless you roll them up. And no strategic's really going to buy them.
Interesting. That's fascinating. I never thought about that. Question number 3. What's one industry trend you think will continue, but you wish would go away?
That I think will continue, but I wish would go away?
Yep.
Industry trend?
Mm-hmm.
Calling gross rents annual recurring revenue. It is annual revenue that does recur, but it's not the same as SaaS ARR.
Break it down for people who are wondering, why can't I call it that?
Because I just believe fundamentally a rental agreement has a different valuation multiple that should be applied to it rather than a software as a service gross revenue number.
Yeah.
Because of the nature of the contract and the nature of the scalability that is suggested by the contract. A lease is bounded by 4 walls and a SaaS contract is theoretically not. So a SaaS contract should trade at a higher multiple than a lease. So you shouldn't call it ARR because it's really not. It's rent, and that's great. I'm glad you're getting a good rent. You're a kick-ass company. Just like own it.
Is that... I'm not familiar. Like, are real estate companies now calling rent annual recurring revenue?
Yeah, they have been for years.
Okay. I mean, I'm not looking at their books.
Well, I mean, ARR is not a GAAP concept anyway, so no one has that on their books. It's in what they, tell people.
Their slide decks. Yeah. Yeah. Okay. Fair enough. Well, this is the start of that happening. 2020 is going to be the year. We'll spread the message far and wide. All right, question number 4. What's one thing you believe will dramatically change or fade away as a result of technological advances?
Will change or fade away?
Yeah. One thing in real estate that will change or fade away.
The process of creating a survey.
Okay.
Is going to become massively enhanced by technology.
Hmm.
And that's going to have interesting repercussions within the real estate world. It'll enable transactions to close a lot faster.
All right. That's cool. I was expecting like blockchain or I'm just kidding. Cool. Well, we're going to move into the last three here. Zach, these are questions more about you, so the listeners get to know you better. First one is, what are you reading?
I am reading, I have it here. I'm reading a couple things, but I'm trying to read more, as I guess everyone is. I'm reading this book by Sam Harris called Waking Up.
Okay. What's that one about?
It's sort of a guide to, it's a neuroscientific exploration into spiritual discovery, I would say.
Oh, that's what you were tweeting about the other night. You were asking for more books on that topic.
Well, I was asking for books on dreams. Thank you for your recommendation, by the way. So
Yeah.
Yes, I would say tangentially related.
Fair enough. For the listeners out there, there's also a pretty good book. Have you heard of it called PropTech 101?
It's a fabulous book.
I think it's pretty good, especially for, and I have to tell you, this one thing that really helped me with, because I did buy the book and read it. So I was running an agency before I joined Avail full time. And anyone who's looking to sell to prop tech companies, I think especially should read the book, because it helped me understand some of the motivations behind, how the businesses are structured and how they operate. So that was one way it was very helpful to me, but I thought it was fascinating. So anyway, that's on the Amazon for people out there. You should go pick up that book. Question number 2, who are you learning from?
Wow. That's a loaded question.
Just tell me your closest network, people in your network. That's all I'm looking for here.
Who am I learning from? One of my resolutions is to get more active on Twitter and sort of find and interact and learn stuff on Twitter. And so I follow a lot of people on Twitter. I follow a lot of parody accounts. I'm trying to learn more through that platform, and that's been great. It's been really interesting getting more active. So I'm learning from sort of everybody I follow on that platform that's active, that's not, spewing hate. And then I'm also learning from a few people who spew hate as well. Learning sort of how to try and not do stuff like that. And then also sometimes they say interesting stuff. Who else? I mean, I'm constantly learning from my partners and my colleagues. I'm constantly learning from my family members. Constantly learning from friends. I'm trying to get, trying to get a kernel out of every conversation I have these days. Sort of, if you can pull and remember like one thing.
Yeah.
I try to read. I try to read a lot of kind of self-help books. I read a lot of Stoic philosophy. I read a lot of ancient Jewish mysticism. Not really helps. So I learn a lot. I learn a lot from that kind of stuff. Yeah, I mean, I'm trying to be a better person. And part of that's like learning, actually listening to other people. So hopefully I'm gonna learn a lot from people, I think so. And one thing we always talk about at MetaProp is like, when you're giving somebody advice, like talk about, like, share your experience with it instead of like giving them the advice. And so, like, anytime somebody like says that to me, like, from my experience, this is what happened, here's how I did it. When I'm like asking a question, or I'm clearly not comfortable or confident with like what we should do, I'm trying to learn from that. So like I'm also cold emailing people, like, all over the place, just reaching out. I was teaching my class up at Columbia, and I asked my students like who had sent a cold email, and like 50% of that day, and 50% of them raised their hands.
Wow.
And I was like, wow, that's pretty amazing. And then I was like, who sent one like this week? And like 20% more of them. And I realized like I hadn't sent one. So I did a tweet storm about it. And then I started cold emailing people. So it was like, that was like the perfect mix for 2020 for me. It's like being more active on Twitter, like sharing, like not care, don't care. People don't like your stuff. Like, who gives a shit? Keep putting it out there. Maybe someday you'll find people who like it. Or like, if you like it, like, and it's not hurting anybody, who gives a shit? Right?
Yeah. I can dig it.
So
I just retweeted your tweet talking about giving people advice, share the personal experience with it.
Thanks, man. I've been, do you follow parody accounts on Twitter?
I think I do. I follow VC Starter Kit.
Yeah, of course. I follow them all. I started following this account.
Praying for X is another good one.
Yeah. I like VCs congratulating themselves. It's just like a hand clap thing. I follow that user. There's a parody account I just found. It's called Klendathu, the Thought Leader, which I think is just like the greatest. So it's like the avatar. It's just ridiculous.
I'll just go through who you're following. I'll try and find that one.
Yeah, it's so I've just been really trying to, like, I don't know. I was basically, I would say, from my Twitter activity used to just consist of, and I still do this, used to just consist of like reading political stuff. But I've kind of, gotten out of just doing that. I still keep up probably too much, but I'm not like totally immersed in it, like a couple hours a day, like I was in 16 and 17. But yeah, it's, I mean, look, Twitter can be a pit and a rat's nest if you let it, but it can also be like a really positive platform. And
I think it's gotten better. I think
I think the experience is good. I think, I think they, they're obviously a lot of issues still with it, but and sort of this, the stuff that it amplifies really big, but I get a lot out of it. And then like, just trying to find like, I was talking to one of my oldest friends who he works at a cemetery in Brooklyn, and so we talk about technology that he does horticulture, landscaping, all that stuff there. And so he's doing crazy stuff with drones and ArcGIS software and things like that. So we sometimes chat about that stuff. But we were also talking about, because he's done the Sam Harris like meditation app course on his phone. He's super into it. And I was sort of bemoaning with him that there's no, like, we actually went to the same Hebrew school when we were growing up, but neither of us are religious particularly. We were sort of like, why isn't there for example, why isn't there a meditation community that, instead of, not that it's wrong, but instead of using Buddhist and sort of Hindu dogma, like use sort of the Jewish frameworks, because, we're just more familiar with it. And so he went and emailed his friend who's like a professor down in South Carolina of this stuff, and he got a link to this book that's like basically like this transcendental meditation, but taught through a Jewish lens. And so he just like texted me right before he started the link to the book. So just like being more, but like that, like I wouldn't have got, like just being more active about like going after what you want to get. And then like finding people who want to like explore like weird niche stuff with you.
That's cool. I can appreciate that. The last one here, final of the last three. What inspires you?
Other people inspire me every day. I mean, just other, people do heroic, or what do they say? Ordinary people do extraordinary things every day.
Mm-hmm.
My wife, she's able to go to school, take care of the kids, run like a half marathon, all in sort of the same day, and still be like, still be not just like crash at the end of the day, like still be able to enjoy herself and have dinner and hang out with friends and, watch a TV show or whatever, read. So that's inspiring every day. My partners do inspiring stuff every day. My colleagues, the people I work with, just every time I get a work product from somebody that's sort of really good, I'm inspired. I'm inspired when people take the time and really give a shit about their work. So I get inspired pretty easily. It upsets me when I can't inspire people in the way that I get inspired.
That's cool. I appreciate that. Well, this has been great for me. I've thoroughly enjoyed this discussion. I think there's a lot of takeaways in here, especially for the other founders who listening, try to understand either more about how MetaProp works specifically, or even what's going on in the mind of an investor in proptech. And so, but before we close out, I want to give people the opportunity, if they want to learn more about MetaProp, or if they want to connect with you, like where are the places they can do that? How do they go about doing that?
I mean, if you send me a pretty well-crafted cold email, I'll respond to it.
There it is. Find his email, send him an email, have your customer send the intro. That's the thing right there. Have the customer send the intro email.
That's
right?
Like next level.
That's next level. There it is. So if you want to talk to Zach, find your best customer, have him send him an introduction email, just book a time, and he'll take your call from there, I bet.
Well, that's it for today. Thanks so much for listening to the TechNest podcast. Hey, don't forget you can get on the email list so you never miss an upcoming episode. That's technest.io. That's TECHNEST.io. Get on the email list. Go to the App Store, whether you found us on iTunes, Stitcher, SoundCloud, wherever you found us. Leave us a 5-star review and share it with your friends. And if you've got a guest or someone that you'd like to recommend, or if you think that you'd be a great guest on the show, hey, send me an email, Nate@realteampanda.com. That's Nate@realteampanda.com. See you guys later.